So yesterday we stopped at to make or buy. Okay, yesterday we stopped at to make or buy. So just a recap. So let's go back to our types of incremental analysis. So yesterday we did accept an order at a special price. So you have accept or reject. So A is Mitra. Okay, hi. Mitra, later you remind me for the attendance, eh? So yesterday we went through this one, accept an order at a special price. So we have the old one, the old decision is to reject, and then the new decision is to accept. Next one, we did also make and buy. So old decision is to make, and then new decision is to buy. And yesterday we went in a little bit into sell or process further. So old decision is to sell, and then new decision is to process further. So today we're going to complete the last three. So yesterday we went through this. This is very important. Decision rule is you process further as long as incremental revenue exceeds incremental cost. So this is the decision. Process further as long as incremental revenue exceeds incremental cost. So what does it mean? Let's look at the example. So they've given you this example, joint product situation for Maria's Creamery. So this is the company. Maria's Creamery is the company. So Maria's Creamery has a joint process where they produce cream and skim milk. Okay, so they've given you this diagram. So you have raw milk, and then your raw milk, you process it further, and then it splits off into two products, which is cream, and then you have skim milk. So this is called multiple product. What we went through yesterday is single product, to process further the table or not to process further. So this one is multiple product. From one product, okay, from one item, you process and you split it into two items. So this point, class, is called the split off point. Okay, where at this point you are able to identify two different products. This is what we call as split off point. So you are going to look at this diagram again in chapter 5 later. We're going to do some calculation, okay, more comprehensive calculation on this using this kind of diagram and examples in chapter 5 later. So we look at the first one. We look at the first one. Let's use blue color. So the first one is from cream. You process further to cottage cheese, and then you sell. So the decision is, do you want to sell at cream, or do you want to sell at cheese? Okay, this is the decision. To sell at cream or process further and sell at cheese. So this is your decision. Okay, and then the second decision is, do you want to sell at skim milk, or you process further and sell at condensed milk? So this is the first decision, and this is the second one. So let's do the first one. So we see here, this is very important. You can highlight this. Joint costs are sunk costs. Joint costs are sunk costs. Because now, do you see the box that I draw? This blue box that I draw? This is your decision. So the sunk cost is, the joint cost is outside the box. Do you see joint cost is before the box? So joint cost is a sunk cost. You cannot put it into the decision. It is a sunk cost. So your decision is only this one in the box. Okay, whatever numbers that is in this box. So let's do this, cream and cottage cheese. So they've given you this data for cream. So the joint cost allocated to cream is 9,000. Okay, class, do you need to use this 9,000? Do you need to use this 9,000? No, correct. No, this one is a sunk cost. So don't need to use. Don't need to use. Okay, cost to process cream into cheese is 10,000. Okay, so where does this 10,000 come from? I go back to the diagram. It is here. Your 10,000 is here, process further. This is 10,000. Okay, the cost to process from cream to cheese is 10,000. Okay, which is here. Cost to process cream into cheese is 10,000. Okay, revenue per day for cream is 19,000. That means here you are selling at 19,000. After you process further cheese, you sell at 27,000. So now you determine whether the company should sell cream or should it process further and sell cheese. So this is the decision. Okay, we are looking only at the first one, class. We haven't do the second one yet. So this is the decision. So you have sell. This is the old decision. This is the old one. And then you have the new decision, process further. So same thing, class. You cannot switch this one. Cannot switch. You cannot put process further in front and then sell behind. Cannot. Because sell is the original decision. All this while they have been selling at cream, selling the cream. Okay, so now they are deciding whether to process further into cheese. So if you sell, that means you are selling at, if you sell, that means you are selling cream. If you process further, that means you are selling cheese. Okay, again, if you sell, that means you are selling cream. If you process further, that means you are selling cheese. So if you sell cream, the sales will be, so we refer back, sales is that here, 19,000. If you sell cream, it is 19,000. If you sell cheese, 27,000. So if you process further and sell cheese, it is 27,000. So same thing, we need to do net income increase or decrease since this is sales. So do you see sales increase? Sales increase. So it is positive 8,000. Sales increase. So positive 8,000. Next, cost to process cream into cheese. So if you sell cream, you don't need to process into cheese. That's why it is 0. But if you process further to cheese, just now it says that it is 10,000. Do you see up here? 10,000. So this is 10,000. So since this is cost, so if you compare the cost from 0, now it becomes 10,000. So cost increase, net income decrease. So net income decrease, correct, negative, correct. Okay, correct, negative. So let's complete this one. Sales minus cost, you get 19,000. So same thing. 27,000 sales minus cost, you get 17,000. And you compare this is your net income. Do you see net income decrease? This is net income. Because sales minus cost, you get net income. So this is net income. So net income, if you compare sell and process further, do you see it reduce? So if it reduce, means it is negative. Or another method is you just add up here. Add up everything here. So let's write our decision. Let's write our decision. So Marias should what? Sell or process further, class? Negative. Correct. Should sell. Should sell, correct. Should sell cream. Not cheese, Cheese means you process further. Should sell cream because net income decrease 2,000. Okay, net income decrease 2,000. Now let me get the symbol. Okay, I cannot get the symbol. Never mind. So, okay, I cannot get the symbol. So 2,000, 2,000 means this figure. Okay, 2,000. So Marias should sell cream, not cheese, Should sell cream because net income decreased 2,000. Okay, another way to look at this, very, very quickly, is going back to your decision rule. Your decision rule. Remember this one? Process further as long as incremental revenue exceeds incremental cost. So what it means? Process further is when incremental revenue is more than incremental cost. So what does incremental mean? Incremental means when you compare A to B. When you compare A to B. Okay, so let's try here. So when you compare A to B, incremental revenue is 8,000. So this is incremental revenue. Do you see? Because you compare A to B, you compare sell to process further. Incremental revenue is 8,000. Incremental cost is this one. You compare A to B. This is incremental cost. So if you look at this decision, don't look at the negative or positive. You just look at the numbers. Don't look at negative or positive, class. You just look at the numbers. Revenue is 8,000. Cost is 10,000. So do you see cost is higher? Cost is higher. So we go back to the decision rule. Cost is higher. So you do not process further. So you sell. Okay, that is another quicker way to look at it. So you sell when incremental revenue is lesser than incremental cost. These two. Now let me see whether I can highlight this. Okay, now let me change color so you can see it clearer. Okay. So you sell if incremental revenue is lesser than incremental cost. So you go back to just now that one. Do you see incremental cost is 10,000? Incremental revenue is 8,000. So don't look at the negative or positive class. You just look at the numbers. Okay, so just looking at the numbers, I know cost is higher than revenue. So Cost is higher than revenue, so sell. Don't process further. Okay, that is one quicker way to look at it. So let's go to the second one. Okay, let's go to the second one, class. Skim milk to condensed milk. Just now we have already done cream and cheese. Let's go to the second one, skim milk and condensed milk. Okay, so skim milk and condensed milk here. So same thing, joint cost is a sunk cost. This one, we don't need to look, don't need to look at it. Don't need to look at your sunk cost. So cost to process skim milk into condensed milk is 8,000. So where is this 8,000? 8,000 is here. 8,000. Cost to process skim milk into condensed milk is 8,000. Okay, and then skim milk, they are selling 11,000, and condensed milk, they are selling 26,000. This is the revenue. So they say determine whether the company should sell skim milk or process further into condensed milk. So this is the decision. So same thing. If you sell, you are selling skim milk. If you process further, you are selling condensed milk. So my sales, if I'm selling skim milk. So my skim milk is 11,000. If I process further, I'm selling condensed milk 26,000. So this one will be 26,000. So net income increase or decrease, you compare 11 to 26. Oh, there's an increase of 15,000. Positive increase. Okay, next, the cost to process skim milk into condensed milk. If you are selling, then you sell skim milk, so there's no processing. But if you process further to condensed milk, there is a cost. So the cost is 8,000. The cost is 8,000. So 8,000 is here. Okay, 8,000 is here. So since this is cost, we look at this is cost. So for cost, the cost increased. So net income decrease. So you have a negative figure here, which is negative 8,000. So this one, let's complete it. Sales minus cost, you get net income. Same thing here. They didn't put, this is net income. Net income. So when you sell, sales 11,000 minus 0, net income is 11,000. So 26, your cost of processing is 8. So you will get your net income at 18. So if you compare, net income increase 7,000. So you get a positive 7,000. So if we go back to just now that rule, class. Just now that rule, do you remember this? Process further or sell. So let's try to do this. Incremental revenue and incremental cost. Okay, incremental revenue. So your incremental revenue will be this. 15,000. This is your incremental revenue. And your incremental cost is 8,000. So, do you see which is higher? If you compare 15,000 and 8,000, don't look at the bracket now, class. Don't look at the bracket, just look at the numbers. One is 15, one is 8, correct. Correct. Revenue is higher. Correct. So revenue is more than cost. You go back to the decision. Revenue more than cost. Correct. Process further. Correct. So how to double confirm? How to double confirm? Sorry. How to double confirm? You just look at the final number. So by looking at it, when you do the quick decision, and when you do this incremental analysis, your answer should be the same, class. If your answer is not the same, means something is wrong. So that is how you double confirm your answer at the end of the day. So let's write our decision. Let me copy from this one. So Maria's should, this one will change, process further to condensed milk. Because net income increased 7,000. So Maria's should process further to condensed milk because net income increased 7,000. Okay, or another way of writing it, you can use the decision rule. Let me copy this and let me give you another example. Let me put at the top, got not enough space. So you can also put Maria's should process further to condensed milk because incremental revenue, which is 15,000, is more than incremental cost, which is 8,000. Okay, you can also put this answer. Maria's should process further to condensed milk because incremental revenue, which is 15,000, is more than incremental cost, 8,000. Okay, so either one. Either one. So you can jot down the decision, the final decision, and then you can answer either way, either using incremental revenue, incremental cost, or you can use the normal one that I teach you, which is net income increase or decrease, that one. So both are accepted. Okay, let's try this. So Easy Does It manufactures unpainted furniture for the do-it-yourself DIY market. So it currently sells a child's rocking chair for 250, and then production cost is 120 variable and 80 fixed. So Easy Does It is considering to paint the rocking chair and sell it at 350. Okay, so unfinished 250, finish 350. So variable cost to paint each chair will be expected to be 90. Okay, and then fixed cost will be expected to be 20. So prepare an analysis to show whether Easy Does It should sell unpainted or painted chairs. Okay, so revenue, if I sell means I'm selling unfinished, which is this one. If I process further means I am selling finish. Okay. So if I sell unfinished, so it says here that you sell it for 250. Okay, so 250. Then when you process further, you are selling it at 350. So you will have a net income increase. Do you see 250 increase to 350? So this is a positive number because it increased. Revenue increase, net income also increase. So if you sell unfinished, your variable cost will be the unfinished one, 120. Okay, but if you process further, of course, you will incur more variable cost. So variable cost to paint each chair is 90. So before this, you already incur 120. Now, to paint the chair, you are expected to incur another 90. So you need to add on another 90. Okay, so it will become 210. So do you see your variable cost has increased? From 120, now it increases to 210. So when your cost increased, your net income will decrease. Okay, when your cost increase, net income will decrease. So this one you will decrease by 90. Okay, which is this one, the one that you increase. So you have a negative figure. And then last one will be the fixed cost. So fixed cost is 80. If you sell unfinished, it's 80. But when you want to paint it, you need to add another 20. So total here will be 100 because from 80 unfinished, you process further will increase another 20. So it will be 100. So same thing, since it is cost. So cost increase, net income decrease. So last one, revenue minus cost, you get net income. So revenue minus cost, you should get your net income. Same goes with process further. And then finally, you compare your final answer. Okay, class, so what do you get? Net income. What do you get? Do you get positive or negative, and what's the figure? Negative, correct, negative 10. So decision is to sell or process further. Sell, correct. So always write your final decision, don't forget. I don't have enough space. Let me put in one more slide. Okay, so decision, what's the company's name? What's the company's name? Easy Does It. So Easy Does It should sell the unfinished rocking chair because net income decrease by 10. Let me see whether I can get the symbol. Yes. Okay, 10. So this will be your decision. Okay, or another one, remember just now, we mentioned there's another way to write your decision. So Easy Does It should sell unfinished rocking chair because incremental revenue. Okay, incremental revenue is here, this one, 100. Is less than incremental cost. Mental cost. Okay, which is 90 and 20, so 110. That is another way to write it. So class, you can choose either one. Okay, incremental revenue, which is 100, is lesser than incremental cost, COST. So this is sell or process further, class. Any question? Okay, okay. So sell or process further, you have two different product. One is single product, one is multiple product. Okay. So let's move on to the next one. This is number 4. Repair or replace. Okay, repair or replace an equipment. So Yamamoto Group is considering to replace a factory machine with a new one. So the group has a factory machine originally is 11 million. It has a balance in accumulated depreciation 7 million. So the book value is 4 million. Okay. How to get 4 million is your cost 11 million minus depreciation 7 million, you get book value 4 million. So it has a remaining useful life of 4 years. Okay, this one is important. So let me highlight this. 4 years. So the company is considering to replace this machine with a new machine, and the new machine is available at 12 million. Okay, this is a new machine cost. This is also important. New machine cost. It is expected to have 0 residual value. Residual value means your salvage value. That means when you sell it after you use it for a few years, you sell it, then if you get a number, then that is called your residual value. Okay, one good example will be cars. Okay, cars. If let's say you buy a let's say you buy a Myvi, you use it for 5 years, and then when you sell it, maybe you get 20,000. Okay, that 20,000 is your residual value. Or another example will be handphones. Handphone, let's say you buy a Samsung handphone. Okay, after 2 years, then you sell it at maybe 500 ringgit. Okay, that 500 ringgit is your residual value. So this machine, it is expected to have zero residual value at the end of 4 years. This machine also can use for another 4 years. Okay. So I need to know the new machine left how many years, which is 4 years. New machine also 4 years. Okay, I need these two info. So if the new machine is acquired, variable manufacturing cost is expected to decrease from 16 to 12,000, 12.5 million. 16 million to 12.5 million. And the old unit can be sold for 500,000. Okay, this 500,000 will be your salvage value, or we call it as residual value. Same thing. This is your salvage value, or we call it as residual value. Okay, after you use it, then you sell it, how much do you get? Okay, that is your salvage value or residual value. So these are the information that I need. So let's try to put in the numbers. Okay. Oh, class, before that, book value. Book value. This is book value is a sunk cost. Okay, because you already buy this machine many years ago, and then you have your accumulated depreciation, so you get your book value, current value of the machine. So it is a sunk cost. It doesn't affect your decision because you are not buying this machine. This is just your book value. Okay, but the new machine, you are currently going to incur costs to buy the new machine. That's why this 12 million is a relevant cost. But this book value is a sunk cost because you already have the machine for a few years. You don't need to incur any more cost to go and buy the machine. So the old machine book value is a sunk cost. You don't include it. But new machine, yes, you need to include in because now you are thinking of buying. So now, if you decide to buy, you need to pay this 12 million. Okay, so remember, book value is sunk cost. So let's look at the incremental analysis. So same thing, old decision is you keep the old machine. You retain the old machine. If you replace means you buy the new machine. Okay, if you retain means you keep the old machine. If you replace means you buy the new machine. Okay, so there are a few things here. First one is your variable manufacturing cost. So we need to calculate based on 4 years. Okay, because just now it mentioned that you can use for 4 years. New machine also 4 years. So it says that if the new machine is acquired, variable manufacturing cost is expected to decrease from 16 million. So that means 16 million is from your old machine to 12.5 million is your new machine. But this is only for 1 year. 16 million is only for 1 year. So you need to times 4. 12.5 million also only for 1 year. So you need to times 4. Okay, that's what they've given to you here. 4 years times 16 million, you get 64 million. So if you buy the new machine, you times the 4 years, you get 50 million. 64 million and 50 million. This is how you get it. 4 years times 16 million, 4 years times 12.5 million. So class, you need to look at the useful years. Need to look at the useful years. And you need to times the useful years because that is the number of years, number of costs that you're going to incur during those years. So since this is cost, do you see cost decrease? Cost decrease. So net income increase. Cost decrease, net income increase. So you get a positive 14 million. Next one, new machine cost. If you are keeping the old machine, don't need to buy, so 0. Okay, new machine cost just now, they're here, 12 million. 12 million. So your 12 million will be here, 12 million. So new machine cost, same thing, cost. From 0, become 12 million, so increase. So net income, decrease. So you have a negative 12 million. And the last one is sales of old machine. So when you sell the old machine, you actually get money, right? So this is your income. When you sell your old machine, you actually get money. So this is your income. So let's see how much when you sell the old machine. The old unit could be sold for 500,000. 500,000. So this is your salvage value, the sales of old machine. So if you are using your old machine, then you cannot sell your old machine. So here must be 0. If you're using your old machine, you cannot sell your old machine. So here 0, and then your 500,000 you put here. Okay, 500,000 you put here. So don't look at the bracket, class. Don't look at the bracket. Later I'll explain to you why there's a bracket here. Don't look at the bracket, class. Don't look at the bracket here. Don't look. This one, don't look at it. So income from 0 become 500,000. Income increase. So net income increase. So you have a positive 500,000. Okay, class, up until here, any question? Okay, are you able to follow? Am I too fast, class? Are you able to follow? Yes, sir. Okay. So if I'm too fast, you just stop me, class. Okay, so let's complete this. So do you see this is cost, and this is cost, and this is income. You are receiving money. So normally at the end here, we will put total cost. Total cost. That's why you have a bracket here. Let me delete this. That's why you have a bracket here. Do you see? Because you want to calculate total cost. That's why they put a bracket here. So 50 million cost plus 12 million cost minus your income. So you will get your total cost at 61.5 million. That's why the bracket is here. But class, in your answer, if you don't want to put the bracket, it's okay. Okay, if you don't want to put the bracket, you think it's very confusing, it is okay. You don't need to put the bracket. You just need to remember these are cost, and then here you have a income, okay? So let's finish this. So 14 million minus 12 million, and then you plus 500,000, you will get a positive 2.5 million. So let's write your decision. So should I retain or should I replace, class? Positive amount. Positive. So which one? Retain or replace, correct? What's the company's name? Yamamoto. Yamamoto should replace because net income increase by increase by 2.5 million. Let me get the symbol. Okay, 2.5 million. So Yamamoto should replace the machine because net income will increase by 2.5 million. Okay. Any questions so far? Okay, thanks. So we'll go for like a 5 minutes break. Okay, meanwhile, you can also try this question. Okay, so later when we come back, we will discuss this question. Okay, so we'll go for a 5 minutes break. Retain or replace a new machine. So let's go to the next slide. The book value of the old machine does not affect the decision. It is a sunk cost. Okay, it is a sunk cost because it cannot change your future decision. So like what I mentioned just now, you have already bought the old machine many years ago. So if you are deciding whether to buy a new machine or not, the book value of the old machine will not affect your current decision. Okay, I give you another example, very simple example. Let's say you are using an old Samsung phone. Okay, and then you are considering to purchase a new Huawei phone. So when you are deciding whether to buy the Huawei phone or not, you won't go and find out your receipt and then go and check what was your Samsung phone's cost when you bought it like many years ago. You won't do that. Okay, but you will go and find out how much can I sell my Samsung phone for second hand. So that is this one. Trade-in allowance or cash disposal, or what we mentioned just now as salvage value of the old machine. This one you will find out because you will try to see if let's say you want to buy the new Huawei phone, how much can you sell the Samsung phone for second hand? So this one you will find out. So this is relevant. The salvage value of the old machine is relevant, but the book value of your old machine is not relevant. It's a sunk cost. Okay, so that is that's what it means. By book value is a sunk cost, and then any trade-in is relevant. So let's try this question. Rochester Roofing Limited is faced with a decision. So the company relies very heavily on the use of its 20-meter extension lift for work on large homes and also commercial properties. So this company actually makes roofing. Okay, they build the roofs on the building. So they use a 20-meter extension lift, okay, to carry their items up to high levels so that they can build the roof. So last year the company spent 60,000 to refurbish the lift, and it has just determined that another 40,000 of repair work is required. That means last year the company spent 60,000 to repair the lift, and then now they need to spend another 40,000 if they still want the old lift. So alternatively, the company found a newer lift that is on sale for 170,000. And the company estimates that the both old and new lift will have a useful life of 6 years. However, the new lift is more efficient and can reduce operating expenses by 25,000 a year. Okay, they can reduce operating expenses by 25,000. Okay, that means if you use the old lift, your operating expenses is 25,000 more. If you use the new leaf, then you can save that 25,000. Besides that, the company can also rent out the new leaf for 2,000 a year. But the old leaf is not suitable for rental. So the old leaf can currently be sold for 25,000. This is your salvage value. Salvage value. If the new leaf is purchased. So they ask you to prepare an incremental analysis to show whether the company should repair or replace the equipment. Okay, so same thing. The old decision is you want to keep the old leaf. The new decision is you want to buy the new leaf. You want to replace the old leaf. Okay, so we look here, you have your operating expenses, you have your repair cost, your rental revenue, old machine cost, and sales of old machine. And you have a total cost. This is cost. So operating expenses, just now they mentioned, if you buy the new leaf, you can reduce operating expenses by 25. That means if you use the old one, you need to pay this 25. If you use the new one, then you can save this 25. Okay, again, the new leaf, if you buy the new leaf, you can reduce operating expenses by 25,000. That means if you are using the old leaf, you need to pay this 25,000. You cannot save it, this 25,000, because it is not efficient. So you have to incur this 25,000. But if you buy the new leaf, then yes, you can save. You don't need to pay this 25,000. So 25,000 is per year. And then you have 6 years. You have 6 years here. So that's why they put 6 years times 25, 150,000. Okay, 6 years times 25, you have 150,000. So this is what you need to pay extra. Okay, but if you replace your equipment, you don't need to pay this 25,000 extra. Don't need. So here will be 0. Okay, because you don't need to pay anything extra. So since this is expenses, you see this is expenses. So from 150 to 0, expenses decrease, your cost decrease, your net income increase. Okay, so since this is expenses, this is 0. So 150 reduced to 0, expenses decrease, net income increase. So you have positive 150. Next one will be your repair cost. So if you look at the question, last year, so this happened last year, 60,000 happened last year. So is this relevant or not, class? If it happens last year, is it relevant? No, correct. If it happened last year, then it is a sunk cost. This is a sunk cost. 60,000 is a sunk cost. Because it happens last year. Okay, but now they determine that they need another 40,000. Okay, this one you need to put in because it is going to affect your decision. Now you need to spend another 40,000 repair cost. Okay, that's why they put here repair cost 40,000. So since this is cost, and then if you keep your old machine, you need to pay 40,000. But if you replace, zero ma. Okay, if you replace, you buy a new machine, you don't need to repair your old machine. So here is zero. So 40 to 0, expenses reduce, net income increase. So you have a positive figure of 40,000. So next one, rental revenue. So rental revenue, this one is different. This is your revenue. So rental revenue, just now the question mentioned that the company can rent out the new lift for 2,000 a year, but the old lift cannot be rented out. So since the company can rent out the new lift 2,000 a year, so how many years? The useful life, 6 years. Correct, 6 years. So 2,000 times 6 years, you get 12,000. So here is 12,000. 12,000. So since this is revenue, from 0 to 12,000, so revenue increase, net income also increase. So you have 12,000. Next one, new machine cost. If you retain your old machine, nothing. If you replace your equipment, let's look at the new machine cost. This one. Rochester Roofing found a new lift. 170,000 here. 170,000. So 170,000 will be your cost. So you need to put in 170,000 here. So since this is cost, from 0 to 170,000, cost increased, net income decreased. So you have a negative number, 170,000. And the last one is your sales of old machine. Sales of old machine here. The old lift can be sold for 25,000. So this is your sale of old machine. So sale of old machine is a income, sale. So this is an income. So your income from 0 become 25,000. Income increase. Your sales increase. Net income increase. So you will get 25,000 positive. So since I want to find total cost here, and rental revenue is income, sales of old machine is an income, that's why you see a negative here. Do you see a bracket here? For rental income, rental revenue and sales of old machine, these two are income, but I am calculating cost. So after you minus everything, you should get 133,000. Your net income here, you just add up everything. 150 plus 40 plus 12 minus 170 and plus 25. You should get 57 positive. Okay, so let's write our decision. This company is called Rochester. Okay, so let's write Rochester should Since it is positive, so you need to go for the new decision. Should replace the machine, the lift, because net income increased by 57,000. Let me get the symbol. Okay, 57,000. So this will be your decision. Rochester should replace the lift because net income will increase by 57,000. So class, when you're doing replace or repair, you need to be very careful because income and cost are all lumped together. Do you see, like for this exercise, income and cost are all mixed up together inside one calculation. Okay, other decisions that you see, they actually split out. Income is one portion and then cost, they put it together in one portion. But this one, do you see, it is all lumped together. So when you're doing this replace or repair, you have to be very careful. Okay, be very careful with the calculation. And always remember, repair or replace, you get total cost at the bottom. Okay, any question? No, Okay, so we go to our last one. Last one is to eliminate or to continue an unprofitable segment or product. So the key is to focus on relevant cost, and then fixed costs allocated to unprofitable segment must be absorbed by other segments. And net income may decrease when an unprofitable segment is eliminated. So the decision rule is, okay, this is the decision rule. Retain the segment unless fixed cost eliminated exceeds marginal contribution margin lost. Okay, what it means is this. So let me write down for you. So class, you can just copy this. You retain the segment, okay, when fixed cost eliminated, is lesser than contribution margin lost. Okay, you eliminate the segment when fixed cost eliminated is more than contribution margin lost. So this one is a quicker way of just looking at the calculation. Same thing like just now, make or buy, remember? Make or buy. You process further when your incremental revenue is more than incremental cost. It's the same thing. So you have a quicker way of making decision, but you also need to do your incremental analysis. Okay, so later we'll come and check on this, retain or eliminate, and then how do you calculate it? So let's look at the example. So Venus Sport manufactures 3 models of tennis racket. So these are tennis racket. Profitable line is Pro and Master. So you see here, how to get contribution margin? Sales minus variable cost, you get contribution margin. Okay, sales minus variable cost, you get contribution margin. So contribution margin minus fixed cost, you get net income. So you look at Pro, it is profit. Master also profit. Okay, problem is with this one. The problem is with Champ. Champ has a negative 20,000 net loss. Okay, so now the company's decision, the company needs to decide whether should Champ be eliminated. So we prepare an income data after eliminating CHAM. Okay, and we assume that fixed cost is allocated 2/3 to Pro and 1/3 to Master. Okay, so what happened is, we go back to just now that slide. Do you see here? Fixed cost allocated to the unprofitable segment must be absorbed by other segment. Okay, so if you just look at this income statement, of course, if I just look at this income statement, this is negative lah. We should eliminate CHAM. This is negative. But you forgot this fixed cost 30,000. You need to allocate to someone else. This 30,000, someone needs to take it. You cannot eliminate it. So let's do the new financial statement. Okay, let's say now we assume we eliminate CHAM. We assume that we eliminate CHAM. So this is what we assume, that we eliminate CHAM. So 800,000, 300,000, we copy from just now that income statement. 800,000, 300,000. Variable cost 520 and 210. So 520, 210. So you get a contribution margin 280 and 90. Okay, now fixed cost. Fixed cost is, fixed cost is here, 160. This is your fixed cost. So we put it into your new income statement, 160. And it says 2/3 to Pro and then 1/3 to Master. So we look at this. You have 30,000, right? 30,000. 2/3 to Pro. 2/3 to Pro. That means 20,000 lah. Correct not? 2/3 to Pro. 2/3. And then 1/3 to Master. 1/3. Which is 10,000. So your fixed cost for Pro now becomes 80,000 plus 20,000. Because it says that 2/3 to Pro, so 20,000 Pro will need to absorb it, and then 1/3 to Master. So 10,000 goes to Master. So now Pro, your fixed cost becomes 100,000. 80 plus 20 from CHAM. 80 plus 20 from CHAM. So it becomes 100,000. 100,000. So your new net income, 180,000 for Pro. So for Master, 1/3 of CHAM should go to Master, which is 10,000. So your new fixed cost will be 50,000 plus 10,000, total of 60,000. 60,000. So your new net income is 30,000. So if you calculate your net income, your total net income for the whole company is 210. Do you see just now, when you have CHAM, your total company net income is 220. Just now it's 220 with CHAM. But suddenly, when you take out CHAM, your net income becomes 210. So your total income decreased by 10,000. This is just looking at the financial statement, class. We haven't do the incremental analysis yet. This is just comparing the financial statement. We haven't started doing the incremental analysis, class. This is just comparing your income statement. Okay, comparing the income statement with CHAM and comparing the income statement without CHAM, but your fixed cost needs to be allocated to Pro and Master. So I just compare with CHAM is 220,000, without CHAM is 210, the financial statement. So if I just compare the financial statement, if I just look at it, of course, with CHAM will be better. So looking at this decision, looking at this financial statement, of course, the decision will be to continue CHAM. Because do you see, with CHAM, the company income is higher, total income is higher. Without CHAM, the total income is lesser. So the decision is to continue CHAM. Okay, to continue CHAM. Okay, so that is the comparing the financial statement. So now let's go to the incremental analysis. Okay, now only we start to do the incremental analysis. So your incremental analysis, your old decision is to continue, and your new decision is to eliminate. Okay, so don't swap their places. In front should be continue, behind should be eliminated. So we use the contribution margin method since they have given you the data using contribution margin. So sales minus VC, you get contribution margin, and then you have fixed costs, and then net income. So if you continue CHAM, now I'm just doing CHAM, class. I'm just doing CHAM. Because your decision is whether to continue CHAM or you want to eliminate CHAM. Okay, so I'm just doing CHAM only. I don't need to do Pro and Master because Pro and Master has no issue. Okay, so I'm just doing CHAM. So if I continue CHAM, so I got all this data from your financial statement. They're here. 100,000 minus variable cost. You get contribution margin minus fixed cost. You get a net loss of 20,000. So I put it here. 100,000 minus variable cost, and then minus your fixed cost, you get a net loss 20,000. So if your new decision, if you want to eliminate CHAM, remember just now that 30,000, it must be absorbed by Master and Pro. So this 30,000 cannot be eliminated. That's why you have a 30,000 here. So in the end, negative 30,000. Okay, so if we compare sales, do you see sales decrease? So net income decrease, negative number. Variable cost, this is cost. So cost decrease, net income increase. Okay, contribution margin is like income. So contribution margin, the income reduce, your net income reduce. So cost will be opposite, but since this one is 0, so 0. And then last one, income. income reduced. Do you see from 20,000 loss now become 30,000 loss? Okay, so income reduced, net income reduced. So based on this, we are going to write our decision. Okay, let's write our decision. Let's use the bottom here. The company should, do you see it is negative? Negative. So should continue champ. Because net income, net income decrease by 10,000. Okay, can you see this one? The company should continue champ because net income decrease by 10,000. Negative. Okay, class? So, just now remember we have a decision rule. Let's go back to the decision rule. Here. Retain the segment or to eliminate the segment. So, let's try this. See whether we get the same answer or not. Okay. Fixed cost eliminated. We need to find these two numbers. Fixed cost eliminated and contribution margin loss. Okay. So fixed cost eliminated. Which one is it? Let me delete this. Okay. So fixed cost eliminated is this. This one is fixed cost eliminated. So in this question, it says that all the fixed costs must be absorbed by the other two products. So 0 eliminated. Eliminated means reduce. Okay, so this question, it says that all 30,000, it must be absorbed by master and pro. That's why your fixed cost eliminated is 0. So we go back to the decision rule and then we put here fixed cost eliminated is 0. Okay, next. Contribution margin lost. Contribution margin loss is this one. This is your contribution margin lost. Okay, contribution margin lost. So class, same thing, you just look at the numbers. Don't need to look at positive or negative, just look at the numbers. So 10,000, let's go back to your decision. 10,000, no need to look at the bracket or negative or positive, just look at the numbers. So 0, 10,000, 10,000 is more. So use this one. Retain the segment, which is to continue the segment. So same thing, class. If you want to use this, but of course, class, you need to do your incremental analysis because that one got marks. But at the end of the day, if your decision, you want to use this, you can. But in your answer, you must always do your incremental analysis. Okay, so let's say you want to use this one. Let me duplicate it. And okay, let me write the answer. So the company should continue champ because, so I can use this also. Fixed cost eliminated, which is 0, is lesser. Okay, then contribution margin lost, which is 10,000. You can also give this answer, no problem. Fixed cost eliminated is lesser than contribution margin lost. Okay, any question on this? Eliminate or continue? Okay. Okay. So let's look at another example. Okay, now assume that we are using back the same example, but now you assume that 22,000 of the fixed cost attributed to CHAM can be eliminated. Can be eliminated if the line is discontinued. So can be eliminated. So do you see it is here? Fixed cost eliminated. Can be eliminated. So this one cannot be eliminated. This one is cannot. So whatever cannot, you need to include it in. This one cannot be eliminated. This one can be eliminated. Okay, so you have a 22,000 here. So do you see at the end of the day, suddenly it becomes positive 12,000. That's why your decision is to eliminate CHAM. So class, do you see that fixed cost? Whether you can or you cannot eliminate the fixed cost, it will give you a different decision. So if let's say now we compare, okay, fixed cost eliminated 22,000. This one, fixed cost eliminated 22,000. So let's go back to just now that slide. Fixed cost eliminated right here, 22,000. 22,000. Contribution margin lost. Let's look at the question. Contribution margin loss 10,000. Same thing. 10,000. So 10,000. So which number is bigger? Of course, 22,000 is bigger. So you eliminate. So class, your final decision, same thing. You can either use this to write your final decision, or you can use the normal way that I teach you, because net income increase. Because net income increase 12,000. Okay, either way is accepted. So we have one question here. Let's just try this. Lambert AG manufactures several types of accessories. So for the year, the knit hats and scarves line has a sales of 400,000. So 400,000. Variable expenses 310 and fixed expenses 120. Therefore, there's a net loss of 30,000. If Lambert eliminates the line, 20,000 of the fixed cost will remain. 20,000 of the fixed cost will remain. That means this one, you cannot eliminate. Okay, so we refer back to just now. Do you see cannot eliminate will be here? You cannot eliminate the fixed cost. Even if you eliminate the department, even if you eliminate the CHAM, even if you eliminate that product, you cannot eliminate the fixed cost. So here, you still have to pay for the fixed cost. So same thing, 20,000 will remain, cannot be eliminated. So 20,000 will be here. So 120,000 reduced to 20,000, you have a net income of 100,000. Okay, and then your contribution margin, since sales and variable cost is 0, so your contribution margin is negative 90,000. So class, let's write your decision. Okay, if you complete all, let me show you the final answer is 10,000. Let me make this smaller. Okay. So you have two types of decision. First one is Lambert should, since this is positive, if it is positive, you go to the new decision. Lambert should eliminate the line because then you copy the title, net income increase by 10,000. Get the symbol. Okay, this is one way to write it. Another way is to compare these two. This is fixed cost eliminated, and this is contribution margin lost. Okay, so which one is bigger? Fixed cost is bigger than contribution margin lost. So you need to eliminate. Okay, let me write. Lambert should eliminate the line because fixed cost eliminated, okay, which is 100,000 is more than contribution margin lost, which is 90,000. So class, don't forget your symbol. When you're doing your tutorial, make it a habit to always write your symbol so that during exam you won't get your marks deducted.